And welcome back here to Live Now from Fox. I'm Andrew Kraft. Let's keep it moving with more of these top headlines, including those on the economy. Our colleague there, Fox News' Connor Hansen, with this report. Let's listen.
During a cabinet meeting, President Trump said countries are rushing to the table after he put a 90-day pause in place for most of his new tariffs.
We let it get out of control, and we allowed some countries to get very big and very rich at our expense, and can't let that happen. It's not a sustainable formula.
We have so many countries to talk to. It's incredible.
China, on the other hand, will now face a 145% tariff, according to the White House, as the trade battle escalates between the world's two largest economies. Despite positive news on inflation, economists say Americans will likely see a price increase on certain goods.
The minute that these containers hit our shores, these prices will be felt. And again, as we've seen in the massive sell-off of U.S. technology companies that rely or that have supply chains that are extraordinarily exposed to China.
Democrats have been critical of the rapidly changing tariff policy. Some are even calling for an investigation into possible insider trading by top officials before Wednesday's stock market surge.
Anybody who traded in the last 48 hours and made an incredible amount of money prior to this tariff announcement, who sits right there in that house, needs to answer for it.
China says it is willing to fight to the end when it comes to tariffs and has been reaching out to other countries attempting to strike deals of its own. In New York, Connor Hansen, Fox News.
Connor, thanks so much. In the meantime, let's bring into the conversation right now our friend there at the American Institute for Economic Research, Dr. Peter Earle. He joins me. Peter, good to see you. We have not spoken since this topsy-turvy week, so I have a lot of questions for you. We obviously brought our viewers the news just yesterday. Big news that this 90-day pause is now in effect, though. China, yes, exempted from that. But I have to add, and maybe you agree with this assertion, it's still a very large tariff rate, is it not? On Canada, on Mexico, the 10% flat tariff rate across the board here. Also, upwards of 145% levied against China. China was exempt from the 90-day pause here. It's still a very high tariff environment. Would you agree?
Yeah, absolutely. It's a high tariff environment, especially when essentially it went from 0 to 10%. We had this proposal that came out about a week and a day ago that was titled reciprocal tariffs, but they weren't reciprocal tariffs. What they were an assessment of imports versus trade deficits. So they were much, much higher than anyone expected. And even going back down to 10%, or of course, the 125% or more on China, those are big numbers. Now China has an 84% tariff on U.S. goods. So yeah, these are still very high numbers. And who knows what tomorrow will bring? There's been so much back and forth that it's very hard to in any way think that this could be an end or even an intermediate, stopping point.
So that's the other thing. I mean, what happens after this 90 days is over?
Who knows? I mean, I have a feeling that we may not even make it to that 90-day point. I mean, there may be some other assessment in the meantime. Certainly, the Trump administration is reporting that many nations are coming to it, hat in hand or, on some other basis to try to make deals. China is reaching out to other countries. I have a feeling that the expansion of BRICS, which is the original Brazil, Russia, India, China, South Africa group, which is now includes 10 other nations. I have a feeling that's going to come into play here because that is a group that spans it spans the world. They have a lot of, they're very resource intensive. They make up a sizable chunk of the U.S. of the world, rather, GDP. And for that reason, they may, find, their first sort of collective purpose in sort of combating, this trade effort by the U.S.
So, Peter, this is how the market ended today. And I have to ask, did some maybe wrongly think that everything was going to be corrected from the week prior? Because that's not what we're seeing in this. Why? Why was it still down 1,000 after it closed there? And you see the market close today, the Dow there, the S&P 500, right, and the NASDAQ. So this wasn't a quick fix. Why not? This pause, I mean.
Sure, a couple of things. So first, the response yesterday was a lot of short covering, and there's a lot of leverage ETFs getting back in shape, putting positions back on and all that. But what I think the market realized between yesterday and today is that this was not a resolution. This was a reprieve. 90 days can go awful quickly, and if there's been so many step backs and reversals in the last week, who's to say we could get 90 days without another change? So I think the market, after being down 5 or 6 days in a row, I think we were down about 13%. I think it took the opportunity to take a breath. But then the rest, essentially the recognition that this is far from over came in, and we saw more selling today.
So, Peter, let's move on to the inflation numbers, which are being, widely touted by especially many Republicans and the Trump White House. I want to put this up. This is from the House Budget Committee there and their chairman, Jody Arrington from Texas. He says today's inflation report shows prices dropped more in March than any month since May of 2020. He says this is proof of the Trump effect in action. Now, the Wall Street Journal, Peter, says this, that President Trump's Liberation Day announcement of sweeping new tariffs did not happen until April the 2nd, which means their direct effects will not show up until the next consumer price report, which will be a month from now. We're talking about March's CPI index, though consumer prices declining month over month in March for the first time in nearly 5 years, albeit by just 0.1%. The overall annual increase was 2.4%. So we're still, Peter, in that 2% target range that the Fed wants, aren't we?
Yeah, so we saw some interesting things today in the CPI report. One of them was not just disinflation, which means a slowing of the rise of prices. We actually saw deflation, which is actual prices falling. And we saw that in a few areas, most notably gasoline. I think both of the headlines and the comments you just said are correct. It is true that we're not really seeing any of the tariff effects yet, which I would think to be more higher prices than lower. But also, we did see the biggest reduction in 5 years in services prices, not in goods prices, but in services prices. And there's a lot of positive stuff. However, I should add the following. There's a lot of reasons for prices to fall. And when you see things like airline ticket prices and hotel reservations and car rentals falling, that could also be, and I suspect it has to do with two things. First of all, a little bit of business cutback because of concerns about the tariffs, a little less business travel. But also we know that consumers have been tapped out, with all this inflation, higher interest rates and all that. So I think discretionary purchases being dialed back is what we're seeing in those prices. And that's not a good reason for prices to be falling.
Obviously, it's still, so early to tell whether or not this pause in the tariff regime is going to have any material impact.
Sure.
Especially with regard to inflation, because before the pause was in place, all last week, even Jerome Powell, the Fed chair, was essentially, holding off any policy decisions because they have to take a look at the inflationary picture that this tariff regime might have instituted, but for the pause here. What do you think Fed Chair Powell is saying after this inflation report today and the pause in the tariffs?
I think he's saying to himself, inflation is on track, right? It's doing the things they wanted to do. It's getting closer to their target rate. So I don't think he'll see any reason to cut for some months. I think if we do see some cuts, it'll be later in the year. But he also wants to keep some powder dry in case tariffs do drive prices up. Now, if tariffs do drive prices up, it's usually one single shock. It's usually not the sort of drifting upward that inflation shows. But I also think that the Fed's going to be cautious because when there's tariff prices, when we had prices rising because of tariffs, what typically happens is it creates a higher noise to signal ratio. So it gets more difficult for the Fed to see what prices are doing in terms of monetary and relative price changes, what actually we want prices to be doing. So I think they're going to use this break to really assess the situation. But I don't think right now there's much call for them to lower rates because the prices are going in the direction they want them to.
Okay, and in the middle of all of that really topsy-turvy week, remember, and you were following this, President Trump essentially dared Jerome Powell to cut interest rates during all of that. What do you think Powell made of that request?
I think that becomes a very important and a very lucrative or valuable opportunity for the Fed to assert its independence.
Okay.
I think that if the president were to put more pressure on like that, I think that Powell would stand up and say, we don't respond to those sorts of things. We're an independent agency, and we base our decisions not upon, the input of the president or Congress, but rather what we see in the data. We know that there are times where people try to influence the Fed, but I think they would use that as an opportunity to reassert their independence.
I have to ask about recession concerns because pre-pause on the tariffs, a lot of folks, Jamie Dimon, there at Goldman Sachs as well, were ringing the alarm bells about an incoming recession for later this year. They have backed off on those prognostications. Were the recession fears all last week, were those premature or were they warranted?
No, I think when we look at the numbers that were rolled out on that Liberation Day announcement with tariffs of 30, 40, 50%, I don't think I think the actual highest was 49%, but some of those numbers were astronomical. And I do think that if they had been put in place, I think that the restrictions in trade and the price increases and the difficulty, getting parts and things like that into this country and sending out raw materials, I do think it might have caused a pretty significant economic slowdown. So I think the difference between the Liberation Day announcement, that list of tariffs that were made, and dialing those back to 10%, even though that's still not great, I do think that may mean the difference between an economic slowdown and continuing on the straight path that we're on.
So, Peter, I have to ask, because this is getting a lot of attention on Capitol Hill. I'm going to ask anyway, you might not be the best to comment on this, but there was a lot of kind of fury from Democrats, especially, after minutes before the announcement of the 90-day pause. Donald Trump, the president, posted on Truth Social that now is a good time to buy. Many Democrats are literally accusing the president and those who know that the pause was coming of market manipulation. What is market manipulation?
So that would be attempts to make the market do something or to provide some advantage that doesn't come about just because of good skills in the market or whatever. Essentially, driving the market up because of the power of the president's voice and all that stuff. I mean, I don't know why he did that, but I could say that it sure doesn't look good. It's a very bad look.
Oh.
And I mean, I would expect investigations to come, if only because we have a highly partisan environment right now.
So, speaking of the highly partisan environment, Alexandria Ocasio-Cortez, she tweeted this, the Democrat from New York. She said, any member of Congress who purchased stocks in the last 48 hours should probably disclose that now. She says, I've been hearing some interesting chatter on the floor. She says, disclosure deadline is May 15th. We're about to learn a few things. She says it's time to ban insider trading in Congress. And, the effort to just ban stock purchases among members of Congress is bipartisan. She's taking it to banning insider trading. What could, hypothetically, the president, members of his staff, his cabinet, members of Congress do with that information if they had it beforehand, hypothetically?
Well, in principle, if you knew if you saw exactly how poorly the market had been responding to all the tariff news, you'd probably have a good idea that with some rollback of that news, the market would explode upwards. So, I mean, you could buy stocks beforehand, or you could buy something, with a little leverage to it, a little kick to it, like options, and you could get a 3 or 4 bagger return. So, okay. I mean, they're in possession of a lot of power, given the voice that they project and the impact on markets, especially when, again, we saw that reaction over the last few days. So, I mean, conceivably, somebody could make a lot of money if they knew that and if they acted beforehand.
Okay. I thought it's worth getting that out there, and thank you for going along with some of those questioning. A lot of people were talking about it. That's why I asked. Peter Earle, you can dance around all of these financial topics, and we thank you so much. We'll talk soon.
Thanks. Good to see you.